All right, everyone. Thanks for joining. Hello and welcome. Hopefully you can hear me okay. Please forgive me if I duck away every now and then just to let someone else in because people do tend to have a habit of drifting in over the next 10, 15 minutes or so. Good to have on board. As is normally the case, there's a very manageable number of you on this call. So if you do want to jump in, you don't have to wait to the end. By all means, just unmute yourself and fire away. More than happy to stop and have a discussion if there's anything in there you've got questions about or whatever. Otherwise, I will just sort of trundle my way through all of this stuff. The market remains pretty interesting, as you can see the headlines there. Doesn't make for particularly wonderful reading for those anyone who's thinking of selling. For those of you thinking of buying, it's amazing. Wellington values hit a new post-peak low. So obviously we had our peak in October 2021. Things fell very quickly from there till sort of mid late-ish 2022, so fell quite quickly. Then they went the drops slowed right down and have broadly been going sideways still since, sorry. But over the last, I don't know, 15 months, 18 months, values have very, very slowly been eroding, and we are now back down to beyond the previous low point, which was May 2023. We recovered heading into the election, and then, broadly speaking, since then, slowly eroding. And so we're down at the lowest point now, lower than the previous low point in May 2023. So, the other message for sellers is that while we've been seeing sales volumes gently increasing over the last 3 years, the degree to which they're increasing has leveled off. It's tailed off a bit in the last 6 months or so. And in October, sales volumes, not necessarily compared to other months of the year, but relative to October, what's normal for October, sales volumes stalled in the month of October. So too early to say whether that's a trend. Those of you who are looking to sell will hope not. And message for buyers is still plenty of choice. So honestly, just get in amongst it. If you're looking to buy, don't wait for things to get better. Obviously, I've been saying that for some time, and in my view, it's been true all the way through. I've never said it can't get better. I just don't. I think the chances of conditions for buyers getting materially better from here are remote, and they have been for some time. So let's get into the detail. Median sale price 767,500 last month versus 795 a year ago, so down a bit. As you can see from the shape of the red line there, that's the 6 month moving average. Broadly been going sideways since around about here. I mean, that's still down, isn't it? But then it recovered a bit, so it's kind of anything around 800, which it hit in about July. Is it August? Yeah. See, here's the actual numbers. The red line is the 6 month moving average. So the actual numbers here and that one there, I think, is June or July. So since then, going sideways. But you can see over the last 18 months, there's definitely still been a very slow sort of eroding of median sale price. Oh, yeah, can I get that?
Okay. I
Yeah.
found this on the web for a very slow sort of eroding of median
No,
and
I do
sale
not
price.
want assistance from AI. Thank you very much. Yeah, so over the last 18 months, you can see they're very slowly eroding of median sale price. Now, median sale price reflects the mix of sales in the month as well as the underlying values. What we're more interested in is underlying values, of course. So best guide to that is the Real Estate Institute House Price Index, down by 26.3%. That is, a big drop, biggest in the country. And interestingly, Wellington City, because that's Wellington region, Wellington City's 27.5%, so bigger still. So still the biggest loser, unfortunately. Still the biggest loser over the last 12 months. Obviously, the numbers are much smaller. So, you know, across the country, some down, mostly up. So broadly, nationwide, things are going sideways. In Wellington, things have continued to erode very, very slowly. And the same can be said over the last 3 months. Not the biggest loser over the last 3 months, though. Taranaki beats us to that punch. But gee, we're talking tiny numbers anyway. 0.5% down for Wellington and 1.5% for Taranaki. Pretty much everywhere else is up. So most of the rest of the country has plateaued and very gradual improvements, but we're yet to see that in our beloved capital. So here's the chart, sort of looking at the Wellington areas and comparing it to New Zealand and Auckland. Now, obviously, this is an index, so the gross number itself. So Wellington region, October 3,193. Well, what does that mean? It means nothing except when you put it in relation to what came before it and what came after it, and so on. So as you can see there, as I've said in the starbursts, in October, we have pushed past the previous low of May. In fact, we did that in September as well. So September was below May, and then October was below that again. So we're slightly below the previous low point in May in both Wellington region and Wellington City. And there you can see the graphs of the house price index. So there's May there, the previous low point, and we're down below that here. And so similarly to the median house sale price, you can see that since early 2024, coming out of the election, overall values have been eroding very, very slowly over the last 2 years. So there we are in Wellington. So look, values still falling slowly across all time frames in Wellington there. I mean, interesting to see. Look, over the last 5 years, still a drop on average, even though that captures a whole bunch of the massive, ridiculous growth that we saw after COVID. So we've unwound all of that basically. Um, Over the last 1 year, varying degrees of weakness. Gee, some reasonably more substantial drops, I suppose, in Lower Hutt and Wellington City. I mean, Wellington City has been reasonably persistently weak. Over the last 3 months, it's more mixed. But the important thing I think to note there is that mostly the numbers are still negative. So there's no recovery, no clear recovery underway in Wellington region. We may be stabilizing, or the drops aren't. We're not dropping very much, but it's still not dead flat, and it's still not positive like it is across most of the rest of the country, unfortunately. Wellington City, you can see there, look, reasonably persistent weakness, over 4% down over the last 12 months. And you can see here from the chart, the grey line is the 12-month result, so it's persistently below the x-axis there. And as I say there, 27.5% down from the peak in Wellington City. So this is eye-watering drops, really, to be fair. Okay, on with the rest of the stuff. So new listings volumes, 848 versus 783 a year ago. So 8% more than a year ago, 34% more than 2 years ago. 2 years ago, that was election month. We'd really been starved of new listings, and that's what made the market stronger as we headed into the election and just after the election. Then we had a ton of property come onto the market, and that made it much more difficult to compete for the attention of buyers. An abundance of stock, buyers could be a whole lot fussier, and so the market weakened. Over the last 6 months, you can see there that on average, we have had fewer new listings coming to market. And this has been, I suppose, the reversal, and one half of the fundamental equation that has been in sellers' favour, and that is new supply coming on has been contracting compared to a year ago. But look at that massive increase in October. That is a huge jump there for that month. And you can see there, as I say, the last 6 months, number of new listings coming on has been declining, but October alone has been enough to bump that and turn that 6 monthly result around. And so, too early to say whether that's just a one-off. We continue at Low & Co to see a lot of property coming to market through November so far. I would say not quite to the same degree as October so far, but from I would say this week is the last week really where certainly where I've been recommending people can bring their property to the market. From next week on, you can do it, but not necessarily, not really advisable. Start to get bumping up too much against Christmas and distracting attention away from property. But anyway, so yeah, October was a big listing month. Um, and so you can see 8% over last October, as opposed to the whole 6 month period, which is down 7% compared to last year. So is that a turning of position? Too early to say. Um, a- and sorry, so there you can see the number of new listings coming to the market in October, well in excess of the normal October levels of 775. So yeah, big listing volume, big listing month in October, which is not great news for sellers. And there it is in another format. So the number of new listings coming on compared to the same month last year. So anything above the x-axis means more new listings. Anything below the x-axis means fewer. So as a seller, what you want to see is that red trend line below the x-axis. We have seen that for the last 6 months. But as I said, in October, it was an increase, and that's turned that trend line around again. That is as opposed to the previous sort of 15 months or so from late 2023 after the election, where we saw a monstrous increase in new listings, which has made the market hard for sellers. On to number of sales. Again, if you look at that red line, you see the trend. We have been gradually but reasonably consistently increasing in sale volumes. This is positive, a positive story, positive trend for sellers. But look at the degree to which it's moved over the last sort of 9 months or so, 10 months. It has been glacially slow. So it really has been flattening off. Um, and as you see there in the data, 655 sales in October versus 676 a year ago. So in October, we had more new supply coming to market than last October, and we had fewer sales than last October. So October, not not the vendor's friend in terms of those data points. It is 1 month, so let's see if it continues in November when those numbers come out. But yeah, and as opposed to the last 6 months, as you can see there, 611 on average versus 594 last year. So again, not a big difference, but at least it's a difference in the right way. So overall, in the last 6 months, we've been selling a small amount more, 3% more than we did in the same 6 month period last year. And that sort of goes to support what I said before. You see the shape of that red line. It's been increasing, but the last 6 or 8 months or so, it's been fairly flat. And that's that 3%. It's barely above zero. Still below long-term averages in terms of number of sales. So October average 705 versus 655. So yeah, we're still not up to normal sale volumes, which, yes, I could have told you that. There it is again. So again, you see that red line there. The 6 month average is showing that over the last couple of years, we've been consistently selling more than we sold 12 months prior. But the degree to which we're selling more over the last 6 months has been, barely above zero. That red line is still above the x-axis, but only just. So that sort of strengthening fundamental aspect of things is the degree to which that strengthen is weakened, if you like. Less strength. Median days to sell, still quite a long time, 46 days versus 41 days a year ago, 37 days 2 years ago. Again, 6 month average, 51 days versus 46 for the 6 months last year, 44 for the 6 months 2 years ago. And at 46 days compared to the October average of 34, it's still significantly longer than we would normally expect. And again, that red line shows you the trend, significantly and consistently taking longer to sell. Then again, you look at the blue bar chart, it has been reducing over the last 4 months. It does quite often take that shape, though, as we come out of winter. So I would pay more attention to that red line, the 6 month moving average, than I would to the individual months. Inventory, 16 weeks again, same as last year, considerably more than we were 2 years ago, though. Again, shape of that red line, we saw big increases in inventory coming out of the election and throughout 2024. Then for the most part of 2025, we've been hovering around 15, 16 weeks worth of supply, which is the long-term average at 15 weeks. So if you consider that at 16 weeks for the last 3 months, we are barely longer than the long-term average. On this metric alone, you could say that the market is balanced. It doesn't feel balanced though, and partly that might be because over the last 10 years, the average inventory has been 10 and a half weeks, not 15. So we've been consistently longer than that. Number of TradeMe listings, 3109 versus 2989 a year ago, 2237. So again, you look at the shape of things there. October and November increases. That's just a spring rush. The average 6 monthly, listings on TradeMe has been coming down. That's positive news for sellers. And viewed in the other direction, you can see that yes, we are still seeing more supply on the market than a year ago, but only just. Whereas a year ago, or 8 months ago, 15 months ago, we were seeing significantly more than 12 months prior. I have a theory that it's not the gross quantum of listings on the market that is of primary concern or interest to buyers. What's more interesting is how many listings are we seeing each week. If the number of new listings drops by half, but the number that are on the market overall stays stable, it still feels to a buyer like the market is contracting because they've made the decision on all the old stock. They're interested in the new stock. And so when that starts to thin out, then they start recircling back round and reconsidering things they've discounted. And so as new supply starts to dry up, people revert back to the old stock they've discounted, and they think they haven't quite got the same amount of choice. So that's why I pay particular attention to the new listings coming on. That's a leading indicator, I think, as opposed to the gross number of listings we see on the market here. So there's a summary, folks. Values are slightly down versus 12 months ago. New listings up versus 12 months ago and above October norms. And that's a bit of a turnaround over what we've seen in terms of the pattern over the last 6 months. It was looking quite positive. We were seeing new listing volumes lower than 12 months ago. So this October data is a turnaround of that. Not good for sellers. Sales volumes down just versus 12 months ago and still below the norms that we would expect. And again, that's a reversal of the trend we've seen lately as well, in that sales volumes have typically been increasing over time, whereas this is a decrease versus last October. Again, that is not the friend of the vendor. Duration to sell is still long versus 12 months ago, 12 days longer than the normal for October, but sales duration to sell has been falling since June over the last 4 months, or 5 months, I should say. Inventory is above normal long-term levels, only just, but significantly above levels that we're used to seeing in the last 10 years. TradeMe listings are slightly up versus last November and have been seasonally increasing in October and November as we come out of as we're in springtime, if you like, and come towards summer. So the message to sellers is that the fundamentals have been slowly improving, that they seem to have stalled in October. Let's see if that's a one-off or is it a new trend. And these fundamentals improving have not yet translated into improving prices or values, or indeed duration to sell. And for buyers, the message remains there's lots to choose from. So yeah, don't hesitate, get in amongst it. Thanks as usual to the data providers. Now I can see there's a question in here if I can get to it. Yeah, got it. Yeah, you're welcome, Peter. Anything for anybody else? Questions, comments, discussions?
Thanks, Adam. Interesting overview.
Oh, hey Andrew, how you going?
I'm doing very well, so I was a little bit late to this one, but
How's the finance looking out there?
it's looking pretty good. Yeah, rates pretty low still, and lower again. And this offer just came out from ANZ this week, which you might have seen.
Haven't seen that one, no.
1.5% cash contributions.
Oh, wow.
Yeah, so it's pretty aggressive, the most aggressive I've seen. So it's yeah, Getting sparking a bit of interest. Um,
Right. Yeah, yeah. And I mean, mortgage rates, they're probably going to come down a little bit more, aren't they? At least short-term rates, maybe not so much the long-term rates.
yeah, I'd imagine so. They've been coming down for the last couple of years, quite significant. So down
Yeah.
to 449. SBS doing 399 at the moment,
Yeah.
with 1% as well.
Yeah.
It's a pretty aggressive. Certainly makes these houses a lot cheaper. The repayments a lot cheaper.
Yeah.
Yeah.
So you're out there buying up a storm, are you?
I'm trying to get my clients to sell them that tender, Adam. There seem to be not that many offers coming in. Not that many
You're trying to get your clients
proposals.
to do what? Sorry?
They're trying to sell their places at tender so they can upsize, but
Yep.
that's a challenge because there don't seem to be that many offers coming in at
Okay.
deadlines.
And
Is
is
that?
this Wellington mainly or
Yeah, yeah. This is Wellington. This is
Wellington? Yeah.
Wellington in the hut.
I mean,
Yeah,
there's no question you can definitely sell property, but you do have to present it well and you do have to price it sensibly. If you aren't pricing the property sensibly, you just won't get the traction and you've got no one to talk to. One thing that's very, very useful when it comes to selling property, and that's having some people to talk to. And so, yeah, you definitely have to price it keenly. So, yeah, I mean, I'm seeing. I don't know what I don't have I don't have. I'm not across the latest data from Low and Co in terms of number of offers and stuff, but I do have it. Maybe I should dig that up again for the next update. But yeah, I reckon that there'd be something like it might not be quite 50% of properties going under offer from Low and Co at tender. I know that our duration to sell is typically quite significantly below the Wellington average. And so that's not necessarily fully reflective of the Wellington market overall, but we're 26% or so of the market. And so, I'm seeing something like, there might be something like 40% going either selling or under offer at tender. So that means, perhaps 60% not, but then a whole chunk more will be selling sort of in the month following.
yeah, and that's obviously the new stock as well that you mentioned as a leading indicator.
Yeah, that's right. Yeah, I mean, obviously the stuff that's selling at tender is new listings. The when it's not tender, at least in Wellington, it's tender town. The stuff that's selling outside of a tender would be typically after the tender has passed. Yeah.
Yeah, cool.
Oh yeah, interesting. Okay, so the banks they're getting keener though overall, and keener to push money out there, and the rules are a bit more relaxed, and so people are finding it a little easier to get approvals over the line.
Yeah, I mean, borrowing power is about the best it's been for 3 years. So there's some chatter about the debt to income restrictions, but they're not actually biting anyone at the moment. So they're not
Yeah,
impacting on investors.
yeah,
When it goes to apply, if you are outside of them, the banks have got a wide discretion, so that's not impacting on things. So what we do see is the low interest rates flows through because the banks are testing at sort of 6% compared to 8% a couple of years ago.
yeah,
Just means borrowing power looks a lot stronger for everyone,
yeah,
and that flows through to investors a lot more because investors tend to carry more lending than owner
yeah,
occupiers. So
yeah. Yes, of course, right. So that stress test has a much bigger impact on the investors with the portfolios than it does just the owner occupiers with one home.
absolutely, yeah.
Yeah, yeah, yeah.
Yeah.
And so what about DTIs?
DTIs, well, they've been in place for about a year now with the RBNZ, but it means that the banks can still lend one out of every five loans to investors if they've got high DTIs. In effect, what it means is the DTIs are not biting anyone, so no one's getting a loan declined because of a high DTI. If it is a high DTI, then the bank can sign it off anyway, and they are. They're not sort of applying any policy of that nature where anyone's
Okay.
getting knocked back because of a
So
high
as long as the
DTI.
fundamentals still make sense to the bank, they're pushing it through.
That's right, so long as it's meeting their normal affordability criteria.
Because in theory, if the as interest rates drop further, the DTI will start to there's potential for it to bite more, right?
Yep.
Because then the lower interest rates, lower test rates means that the investor can borrow more.
Yep.
More they borrow, the closer they get to the margin on the DTI limit, right?
Yeah, exactly right. So I haven't looked at the RBNZ data, but I'd imagine there will be more high DTI stuff being approved and settled at the moment. Um, But even though that is the case, there's a large discretion with the banks. So it's not stuff where anyone's getting knocked back due to high DTI stuff.
Yeah, yeah.
Yeah. So it's
So it's all interesting. I mean, so money is getting easier to get, and so I suppose one message for investor buyers there is take advantage of the ability to borrow money while the market is still in buyers' favour, and don't wait for things to start tightening up before you decide to make a move along with everyone else.
yeah, I think borrowing power, I mean, it could well be close to as good as it gets,
Yeah, right.
especially looking at
Yeah,
those prices in a down market.
yeah.
So
Nice one.
yeah,
Awesome. Oh, well, thanks for that update, Andrew.
cheers.
Anything for anybody else? Questions for me or indeed Andrew on anything that we've talked about tonight?
So Adam, we're wanting to purchase our own occupier. And with the market as it is, does this mean submitting a lower offer may still get it accepted?
Yeah, yeah. I mean, obviously, every vendor wants to get the best they can,
Yep.
and no vendor will take an offer that's lower than another offer that's out
Obvious.
there. And obviously,
Come on in. I'm just on a Zoom meeting at the moment, but I'll be off shortly.
thank you for that little update.
See you
What
soon.
was that?
Righto. Cheers.
That's I think that's you, Peter. Um, it's Morgan, isn't it? Um, but yes, the odds are more in your favor, or there's a greater chance that you will be able to get lower offers accepted naturally. And same with things like subject to sale of a house and all those sorts of things. Obviously, if a property is, in the tender process, for example, and you want to, and they will look at offers earlier than the deadline. No point trying to make a low offer then because your offer has to be persuasive to persuade them to abandon the full process.
Yep.
If you make the offer at tender and then and it doesn't get accepted and it doesn't sell, then in a month's time, if the property still is there, then at that point the vendors are obviously going to be more open to considering offers that they weren't interested in a month ago.
Yep.
Just to state the obvious. But yes, yes, when the market's like this, naturally it's better for buyers. What I still find though is that obviously, and this is just human nature, 80% of the buyers are chasing 20% of the properties. And those ones are the least likely to be able to be snapped up at bargain prices because they are still enjoying competition.
Yeah.
But we find if we have, for example, 20 properties closing in a week, and we might get 30 offers across 20 properties. Half of those offers will be for four of those properties. So four properties might get 15 offers. Then you get another four that get, eight offers, and then you get another four that get one each or that sort of thing, and then you get, 40% of them are going to get nothing.
Okay. Cool.
So yeah, it definitely does. It's not an even distribution. It's definitely skewed towards the quality properties for sure. Yeah.
Yeah, there's definitely a lot of properties though that are not getting those multiple offers coming
Oh
in,
yeah.
and the ones that are getting multiple offers, some of them are going to be conditional on sale of another property.
Yeah.
So yeah, I mean, when people are making offers that are attractive with no conditions, sort of thing, or fewer conditions, chances are a lot better than they have been in the past.
Yeah. Yeah.
Um, yeah, so I mean, I think it's definitely a better position to be buying and upsizing in particular.
Oh, 100%. This is a great time to be a net investor, whether you're buying the first one or buying more properties or selling a smaller one, buying a bigger one, because the gap, the cost of scaling up is lower. But it's still the case that the properties that are most sought after will attract the most offers. And so if you are particularly wanting to get bargains, you still will probably have to be pursuing the properties that generally your average buyer doesn't want.
Yeah, and I mean there are sellers in that position, like some of the ones I'm working with, who they do need to sell it so they can upsize to
Yeah.
the next property.
Yeah.
So when that stuff's getting past them at tender, they do tend to increase their motivation.
Of course. Yep. Very good.
Thank you.
Anything else for anybody else? All good. All right. Well, thanks for checking in, everyone. Obviously, if you want individualized advice, just reach out to me. Happy to help. But otherwise, I'll see you again next month. All right. Take care. See you.
Thanks.
For your input, Andrew.